Hey, this is Yossi. I run a small investment firm that specializes in REIT investing, and just recently I had the chance to meet with Realty Income CFO at the EPRA REIT conference in Germany. I had a brief discussion with him about what I view as the pros and cons of Realty Income from the perspective of an investor. On one hand, Realty Income is quasi indestructible. It has a very strong balance sheet, an A- credit rating, very large scale, owning over 15,000 properties, and it has one of the best track records in the entire REIT sector, having managed to grow its dividend for about 30 years in a row. But on the other hand, I think that the main issue facing Realty Income today is that it might have become too big for its own good, and its very large size may slow down its growth going forward. Slower growth could then lead to lower returns and lead to underperformance relative to its close peers, and in fact this has already been happening for the past decade. I'll put a chart on the screen where you'll see the performance of Realty Income versus its close peer AgriRealty, and you'll see that Realty Income has earned much lower total returns over the past 10 years. For this reason, I have previously argued on this YouTube channel that Realty Income is a great REIT for retirees and conservative income-oriented investors because it's offering a 5% dividend yield that's very safe and growing. But at the same time, I've also argued that some of its smaller peers like AgriRealty would be better suited for total return-oriented investors because they're able to grow at a faster pace, and I expect this to result in higher total returns over time. But now comes the interesting part. The CEO of Realty Income had an interesting counter-argument to this that I had not previously considered. They think that they are today presented with a significant opportunity in Europe because its net lease market is very big in size, but it has relatively little competition for new acquisitions. I mean, if you look at the American net lease REITs, most of them are only active in the US, perhaps in Canada, but very few of them are active in Europe. I only know of WP Carey, Realty Income, Global Net Lease also to some extent, but it's a much smaller REIT. Most of these players like AgriRealty and so on, they're only active in the US today. So Realty Income think that this will be a differentiating factor going forward that will be a significant advantage for them relative to AgriRealty, and they think that the opportunity is so big that they are now even considering to list their European entity separately in Europe, as they think that this could afford them a lower cost of equity. The European entity is today growing much faster than the American entity, and they also have a much longer runway of rapid growth potential, and therefore I think it's quite plausible that if they had a separate listing in Europe, investors would reward the European entity with a higher valuation multiple, resulting in a lower cost of equity. This is especially true because interest rates are even lower in Europe than in the US, and investors have much fewer options. There are only a few publicly listed companies in Europe that invest in net lease properties, and most of them tend to trade at very high valuations. To give you an example, Cybus Nordics is today priced at a roughly 25% premium to its net asset value, and that's despite having very high leverage and having recently cut its dividend. Therefore, if Realty Income was going to list its European entity, I would expect there to be a lot of demand from yield-starved investors. This higher valuation would then give it access to cheaper equity capital, which would allow it to acquire more properties at larger spreads, accelerating its growth prospects. This makes me more bullish on Realty Income because today priced at a historically low valuation relative to its close peers like AgriRealty and Essential Properties Realty Trust. I'll put a table on the screen comparing their FFO multiples, and you'll see there that Realty Income is today priced at a 4-turn lower multiple. Historically, they've been trading more or less in line during most times. While the CFO of Realty Income didn't go into any details, I would assume that the US entity would still own a big chunk of the European entity, and that this separate listing will really just be there to unlock value, achieve this lower cost of equity to accelerate growth, but this means that the US entity will still benefit from all of this. But how serious are they really about listing their European entity? And it's of course hard to say, and the CFO made it very clear to me that at this point it's just an idea that they're exploring. Nothing concrete is really planned yet, but I think that the fact that they participated at this conference in Germany, I mean, they flew the CFO as well as the president of the international operations all the way to Germany to participate at a 3-day conference. That's a pretty big investment in money and time, and so that tells me that they are very serious about the expansion in Europe. The CFO also told me that they just opened a new office in Amsterdam. So far they only had one in the UK, I believe in London. And I think it's quite interesting that they picked Amsterdam for their location in the Eurozone because, you know, in the Netherlands is not a very big country. It's not a big net lease market per se, but the Amsterdam Stock Exchange is very well developed and it has many REITs. So perhaps it might indicate that they are looking at seeking a listing in Amsterdam. Here I'm just speculating. I really don't know, but it's interesting nonetheless that they're opening an office there. Ultimately, I really don't know if they will follow through with this, but if they do, I think that this would be an additional catalyst for Realty Income to accelerate its growth, make it more competitive with its American peers that are not present in Europe, and it could help it unlock value for shareholders, reaching a higher FFO multiple. But even if this never happens, I would still expect Realty Income to do quite well over time. Over the past years, they've greatly improved their internal growth prospects by focusing on acquiring properties with higher rent escalators, and they've also greatly lowered their payout ratio to allow them to retain more capital, to reinvest organically into more properties. And they have this nice slide in their latest investor presentation that breaks down their internal growth prospects, which means their organic growth prospects. And the takeaway here from this chart is that they expect to grow internally by about 2% annually. If interest rates drop significantly from here, as we expect, they could achieve close to 3 to 4% annual internal growth. Then on top of that, they're also growing externally, of course, and external growth is when you raise more capital to buy more properties, and therefore it's more uncertain because it depends on your cost of capital at the time. But based on today's market conditions, they believe that they could add another 2 to 3% of annual external growth by acquiring additional properties. Again, here, as I mentioned earlier, I think that some of its close peers like Realty have a significant advantage. I think that they can achieve much higher external growth because they have a lower cost of capital, a lower cost of equity, higher FFO multiple, so that's resulting in higher spreads on their new investments, and their much smaller size also is very big advantage here because it means that new acquisitions truly move the needle for them. They don't have to acquire billions and billions of assets to really have an impact on their bottom line. Realty can be much more selective, focus on the most accretive deals, and this is an advantage for when you're a smaller REIT. But again, as I mentioned earlier, I think that the potential listing in Europe could give an edge to Realty Income and make it more competitive with its American peers. And so if you now add all of this together, you have the 5% dividend yield, you have 2 to 4% of internal growth and another 2 to 3% of external growth, and you get to 7 to 12% average annual total returns going forward. But that's just operationally. If you now think that the FFO multiple of the company will also expand and perhaps get closer to that of its close peers like Realty, there could be another 50 to 20% upside from here. And I think they could potentially achieve this if they list their European entity. It reaches a high valuation multiple, lower cost of equity, it accelerates the growth of the entire company. It could be achieved. But again, as I said earlier, I ultimately don't know if they will do this, but I like that there is this potential, that there's optionality to potentially unlock additional value, and this makes the risk reward of Realty Income even more compelling. Right now, I still don't own shares of the company. As I've said in my many previous videos, we've been focusing mostly on Essential Properties Realty Trust and Realty in the net lease property sector. Those have massively outperformed Realty Income, so our thesis has played out. We're correct in a way, but right now I'm much more neutral because this outperformance has already taken place, and Realty and Essential Properties Trust have repriced at higher valuation multiples than Realty Income. I don't think that there's really an opportunity or a significant advantage for them anymore. Right now, if you ask me which of these three REITs is the most compelling, it will be a much harder question to answer than it was a year or two ago when these three REITs traded at very similar valuations despite Realty Income having a growth disadvantage. My plan is to follow what comes out of this, and if Realty Income becomes serious about seeking a listing in Europe, then I will strongly consider investing in the company, perhaps sell some of my Realty and switch that back to Realty Income because today priced at a steep discount. If there's a plan to unlock value, I think that then it could offer better risk reward than Realty at this time. I will of course make sure to publish updates on my YouTube channel, so make sure to subscribe. If you enjoy this type of content, exclusive content coming from conferences, make sure to click the like button. That helps me a lot to keep on growing. And then finally, if you want to access my entire REIT portfolio, you can do so by joining my REIT newsletter, High Yield Landlord, for a 2-week free trial. So this will give you immediate access to my portfolio. You won't be charged anything for the first 14 days. So essentially not taking any risk in accessing my portfolio. Then if it's for you, you can stick around. You also get a $100 discount for the first year of your subscription. Again, thank you for your support and see you at my next one. Bye bye.